Enovix is up over 100% in the last 6 months, and here's why. In this video, I'm going to be speaking about why Enovix is such an interesting company. Their battery technology is changing the game, and we're going to get straight into it in this video. But before I get into today's video, let me talk about a Patreon account that I've recently opened. I have the link in the description, but here you'll be able to get all the numbers for Enovix. I have a bull case, base case, and bear case, and you can check out all the numbers in the link in the description. So let's get into the main video now. The recent stock price of Enovix has ranged from $8 back in February all the way up to $19 as of today. It's up over 141% in the last 6 months, and the market cap of this company is now a $3 billion business. As we can see, this company doesn't have a PE ratio or dividend yield, and that's because this company is a pre-revenue and a pre-profit company. So this is definitely one major thing to consider when investing in this company, but there's some real potential behind this business. So what do Enovix actually do? Well, what their mission is to create the most efficient and high volume producing battery on the market. And what they have come up with is a revolutionary business that uses silicon battery to maximize performance and increase the efficiency of their battery. So the application for this is absolutely massive. One of the largest markets at the moment is wearables and the Internet of Things. Anything where digital wearables or things such as cameras, computers are massive markets to Enovix. And this is where a portable battery can be used to implement all over from AR to VR to power these computing accessories. And again, the capacity advantage is up to 65% compared to the current available products on the market today, which is a massive competitive advantage. Again, they can be used in smartphones to improve the battery life for 4K videos, AI devices, different radios, which can be currently not at maximum performance because the batteries is too low to keep up with the smartphone's actual processing speed. Then we implement laptops and tablets. Again, massive markets which could significantly increase Enovix's revenue, and that total addressable market is huge with the different applications that Enovix can go after. So we can see here for laptops and tablets, the Enovix battery capacity advantage is up to 43% compared to the current available markets on the products today. So we can see where the Enovix application actually is and where the laptops and tablets can benefit from just adding the Enovix battery into their system. Then we look further down. It can be used on a B2B section as well from different platforms such as medical devices or industrial devices, where again, the capacity advantage is up to 65% compared to what is currently available. Now, another massive market is the electric vehicle market, as we all know. This has a potential to be absolutely huge for Enovix, and the total addressable market is once again huge. They have a low-cost manufacturing process of the batteries, and the silicon development of the battery just enables that better performance that can be massively used for the electric vehicle market. Moving over, let's now take a look at what the battery actually looks like to achieve this high energy and high capacity battery from a silicon anode to power technologies for the future. So we can see that the different layers is a massive architectural constraint system, which has huge benefits for safety technologies and high energy density and capacity performance sections. So this is the example of what the battery would look like. We can see from an AR perspective when taken down, we can see the different layers and the complexity of the battery that is actually being created. It's addressing massive silicon parts where other battery makers are completely behind. This company has a huge advantage on other competitors like QuantumScape and other large companies. So again, this is a massive advantage which people don't really know enough about because they aren't looking at the smaller details into this company. Again, this is next generation battery manufacturing. This is one of the highest techs, and there's huge, great executives at the top that are wanting this company to exceed. Let's compare QuantumScape to Enovix now, because these are two battery makers, but one is performing and one is underperforming. And the difference is execution on production. QuantumScape is missing numbers, and this is putting heavy pressure on its stock price. While it states that these batteries could be faster and also safer while being less expensive, that is great. However, you have to deliver on the numbers that they're actually promising, and currently they are missing. Their clear challenges are persistent and problematic at QuantumScape, and the execution is not good enough currently. And this has put massive pressure on stock performance, as I mentioned. And shareholders have lost faith in this company, whereas Enovix is delivering on their production capabilities. But let me get into my next article now. So when we consider the battery maker of Enovix, the stock is jumping on the Q2 production data, which is absolutely great because this means the execution of that production will relate into future revenue because they can produce more batteries at scale. So this is where we are forecasting over 18,000 units manufactured, and it expects to exceed its quarterly guidance of the number produced in California with more than 2 weeks remaining of the quarter. They again reiterated its guidance of 180,000 sales for customers for the year. And that led to a massive stock jump in Enovix, which has brought the price from $8 to now close to $20 as of yesterday. So we can see that right now, Enovix is destroying the competition, delivering on production numbers while QuantumScape can't hit anything. And this is going to impact performance over the next few quarters and years once this production keeps ramping up. And Enovix is right there to deliver with great management. But I'm going to get into the management right now because there's some great news that management are doing. Another major bullish point is that we can see that Enovix insiders are buying this stock up. Over $5.5 million of stock was added to Enovix insiders. They clearly see this business as extremely undervalued at the current stock price and are buying up shares crazy. So we can see in the last 12 months, the biggest single purchaser of an insider was the executive chairman of the board, Thurman Rogers, known as TJ, who bought $1.4 million worth of shares at a price of $10 per share. So he's already up extremely nicely. Again, in the last 12 months, insiders purchased over $510,000 worth of shares, equivalent to $5.5 million. So we can see, whereas we can compare this to insiders that sold only 130K. So the difference in buy to sell is massive. And it's another major point because it just shows that the insiders and executives see this business as very undervalued, but they also have a shared interest of needing this company to perform eventually so that they can eventually get paid out from the shares that they bought at the current price. So this just aligns our goals with management, which can drive this stock price hopefully up higher. And it gives the incentive for them to perform to the maximum. Let's move over now to the investor presentation because there were some nuggets of gems in this company which most people aren't speaking about. So we can see a large major competitive advantage here is a differentiated technology that they're producing. The silicon anode is massive. It increases that battery capacity, as I mentioned before. They also have a brake flow safety innovation, which enhances thermal performance, which increases just better technology from that differentiated performance that they are increasing. Again, the customer momentum, they can see that the accounts qualifying for Enovix is also growing. From Q4 2021, that was at a 43 range, but now Q4 2022, that's almost doubled to 78. Again, active designs is up from $355 in Q4 2021 to now $669 million in Q4 2022. They're scaling production with an experienced team. They have leadership backgrounds of Micron, Qualcomm, Enphase, Tesla, AMD, Cypress. We can see this is an efficient company which has huge experience behind it. And this can drive that execution, which a company like Enovix needs massively. Now, looking further down, they give a section about the total addressable market and where they see the actual breakdown of the Internet of Things being an $8 billion total addressable market, the mobile section being an $11 billion market, and the computer section being a $4 billion market. Combine this together, you're talking about a $23 billion total addressable market, which need batteries. And all these companies are going to want the most efficient, the most safe, and the best performing batteries. And Enovix can do that with the scale in production. So let's wait and see whether or not this can actually have a huge impact of Enovix gaining some of that market share. Now, looking further down, we can see other massive total addressable markets, whether it's the EV market, which is expected to be 523 billion by 2040. Then we consider the other accessories, where you include chargers, electronic chargers for companies. You talk about the B2B section, which companies need for laptops, phones, all that type of section. These batteries can be used to power everything. Now, further down, we can also see further different leading customer and engaged opportunities. The mobile computer section, as we mentioned, is around the 23 billion by 2026. Then you look at the funnel of where Enovix can drive this growth and revenue from. There's a funnel of 6% of total addressable market for all the production year, which could equal 1.46 billion that they are estimating. Again, we look further down and we can see the difference where they talk about the different high energy density. Now, I won't lie, I am not technical, but what I will say is that lithium compared to silicon is absolutely rubbish. Silicon absolutely destroys it when we're talking about the different content. And we can see here they give a nice example of the theoretical, which breaks down the better percentage where silicon compared to lithium. Now, further down, they talk about their brake flow technology, again, to increase safety from it not burning out, which is a major problem with lithium batteries currently. So this is where silicon prevails over lithium, a major benefit that most people have no idea about. But Enovix is doing everything they can to perform. Now, the biggest nugget is the scale up strategy, because this is going to be the point in which Enovix can start to deliver growth and revenue into the numbers, which are currently non-existent because this is a pre-revenue and a pre-profit company. So that is one major risk, but they have a huge strategy that we can see here. In Fremont, the California production today in Generation 1, the output target is 180,000 units, which they've already reaffirmed guidance for. Then we move into 2024 and 2025, and they're expecting Fab 2. This is going to be a Southeast Asia production facility, and the output target is between 9.5 to 18.9 million units per Gen 2 line based on the cell side. And then we can see the capacity in expansion and the optionality. Additional copy extract Gen 2 lines in Fab 2, lines placed for funded customer sites, and then JV licensing for the EV market. These different strategies are going to enable production capacity to increase and drive that performance of Enovix. The company has to execute on this scale up strategy, but I believe there's a huge chance with Enovix to be able to do this. And at the current valuation of $3 billion, this could be a $30 billion business like Enphase with the scale up strategy that it's proposing. But this is very speculative as a company, but I think we have to consider that a battery company is always going to be speculative until it's not speculative. So let's get into my final summary. In summary of this battery company, it is a very speculative company being a pre-profit and a pre-revenue business. However, it does have potential to be a 10x stock because the killer management has a definite production scale up plan in place that can deliver huge growth to perform. Align that with the shares that they are buying. They are incentivized to perform to maximize the share price so we both get paid out. And that's a great incentive and a great bullish point from a shareholder perspective. Then you also consider the competitive advantage of the silicon battery compared to a lithium battery. And then you see QuantumScape, where they are missing numbers on production. Enovix has that potential. Again, this is all potential, but the total addressable market of battery making is absolutely crazy. We are talking over probably $1 trillion business with all different verticals combined. When we consider the application into tablets and phones and EV markets, combine it all together, and you have this diversification of products. And this business is already producing at scale. Reaffirming guidance of 180,000 is no small feat. So when we consider, do you want to start a small position in this company? I think it could be worth it. There are definitely other speculative options out there, but Enovix has probably the largest potential I've seen in a long term. So, whether or not you are buying, this is up to you. As mentioned, I have all the Patreon numbers below for what I believe Enovix can be worth in the future. So, make sure to check it out. Now, if you guys aren't subscribed already, make sure to subscribe, like this video for more content, and I'll see you guys in the next one. Thanks for watching. I'll see you later.